Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our 1 month recap for M1 Finance, individual account, and the Roth IRA. We're going to go over the total equity in both portfolios. We're going to look at the dividends that were paid out, what stocks paid out dividends, where those dividends were reinvested into, and whether the portfolio moved up or down, measuring the total return for the month of January 2020. Now today is Friday, the 7th of February. It's 1 in the morning right now, so the markets have not opened up on Friday. I'm recording this, and I know the numbers are going to be a little bit skewed as far as where we were at equity-wise at the very end of January. I have added $115.35. There have been some market recovery since the end of January, but we'll see in the spreadsheet that I have where we were at as far as total return and the equity, but we'll still cover it here on the platform. So if this is your first time here on the channel, I do cover the stock market. I cover dividends mainly, but I also include content going into real estate and personal finance. So if you're interested in any of those topics, hit that subscribe button below. If you do enjoy this video, find it helpful, definitely hit that thumbs up button below. I do appreciate it. And if you have any comments or questions going over any information on this video, M1 Finance, the stock market, drop it in the comment section below. I do read and reply to all your comments. And let's go ahead and get into the video. So we're going to look at the total equity in the portfolio, which is up currently. We have $20,828.71 with $19.65 sitting in cash. This cash was made this week alone from companies paying out dividends. If we look at the 1 month performance right now, including this dip here. So we ended here, right here in the dip. We were down to almost $20,000. We went from a high of $20,908 all the way down to $20,127. That's almost an $800 dip. Now, since this point, we have recovered our equity, over the past, is that a week? In a week, yeah, we've had a week here. We're up 2.88%. We've recovered most of our losses there. Another day of 1%, 2%, we'll basically be back at where we were at. Plus, we'll be exceeding it because we are adding equity. We're just buying back shares at a deeper discount because a lot of these shares got hammered here recently. So Kellogg's went down 8% today due to lowering guidance, but we're not going to get into that right now. So that is the total equity in the portfolio. As far as the 1 month return, this is showing 1.25%, but we had actually flatter returns for the month of January just because we actually ended here at 2127.09. So with that said, let's go ahead and jump into the dividends that were paid. We'll go quickly over this, because I don't want to go into every single one. I think that's a little bit boring. I'm sure if you looked at the numbers, you would see which specific companies paid out dividends, and we'll actually go over the total here in just a second on the spreadsheet. But if you guys would like to look at every single holding, I'm not going to name them all out, but there was a good amount here that were paid out during the month of January, starting with Walmart and ending with JP Morgan paying out on the 31st of January. So if we were to add all these positions up, I have it here on the spreadsheet, starting with Walmart going all the way down to JP Morgan. That was a total of $52.96. So much different than in January. Where's January of 2019? So here's January 2019. I made $38.01. So over the year, we've been adding equity in the portfolio. We went from making $38.01 in a month to now $52.96. But that's here in January. We also increased our other months as well throughout the rest of the year. So you'll kind of see that progression as we move here into 2020. So really good there. As far as where these dividends were reinvested into, this is where we'll look at our trading. What positions, what were we doing as far as market? On early January, we made a video. I had some equity available on hand. I went ahead and added into a utility company called UGI Corporation. A little bit later that month, I made 3 additional buys. This is where I started adding new positions into my portfolio. I felt were a little bit beat up here in the short term that could potentially buy, start buying into these here in the short term. As I add more equity to them, I'll be allowed to dollar cost average. If they fall, I will just add more to it, lowering my unit costs, increasing my yield on costs, and just getting a better dividend payout going forward with these specific shares. So I started buying some new positions in my portfolio. I continue to do that into the 14th of January. On the 16th of January, I decided to take a little bit of profits from Apple. Not bad. I think Apple's actually higher than this price now. Look up Apple stock. It's now at $325, so it has gained roughly $10 since kind of selling it out. That's fine. Not too worried there. And then I moved that equity into Simon Property Group and Waco Group. Now, as far as continuing on the 21st of January, we sold out of CenturyLink. I'm not sure where they're at either right now. We'll go ahead and look at this one. So I sold out of them at $14.16. If we look at where we sold CenturyLink, $14.50. So yeah, they moved up slightly from where we kind of sold them, but I just wanted to be out of that position. It wasn't one I wanted to be long in, so I just decided to move equity out of that position and move it into positions that were more long-term, such as Lancaster, Waco Group, Clorox, and McDonald's. So getting out of that one and moving. And then on the very last buy for January 20, on the 27th of January, I made one total buy, and this was towards Chevron. Chevron was going to be going ex-dividend in February. I kind of wanted to start focusing on it. It actually got really beat up here in the short term just because of oil. So I bought this at $110.28. So I think it's actually gone down. I know recently it has actually been recovering here slightly. So it's at 109. But just over the past week, I do think it's found a bit of a bottoming out point here. So I bought it within this little area here, and it's starting to show some recovery signs. It's not moving and bleeding out anymore here. You can see sort of a dip at 106 is sort of a support there. So that was the buys in February, the dividends that were paid out, and also where some of the dividends that were paid out were kind of reinvested back into. So overall, it was a pretty good month in the month of January. Now, jumping into our spreadsheet now, I think this is where we're going to kind of finish up this video. Actually, let's go ahead and look at the taxable count. I haven't covered the taxable count in a while. We can see a huge difference between the M1 Finance Roth IRA and the taxable count. You can see here that this one, since February 8th, 2018, so I did buy the S&P just slightly lower than where I started the other portfolio, but still, this hasn't had any equity added to it. I added a base of $100 into this account. Every time someone, a viewer, an investor, a brand new shareholder, friend, family, viewer, subscriber, etc., signed up using my referral link in the description below, I received, I believe it was, it fluctuated from $10 or $20, just depending on the promotion that M1 Finance was having at that time. Over the course of 2018, 2019, this portfolio slowly crept up, making returns, but also had referrals getting added to it. So every time someone signed up, they would make either $10 or $20, and then I, as a referee, would make 10 or 20 bucks, and that's helped that out. So overall, the total return here is money weighted, and this has a 41.19% return. I'm not sure how this one would actually have done in comparison to my portfolio had I added more money, more of my own equity versus having it just with a base of 100 bucks. So I'm not sure. We can actually see it down here. The Vanguard here is basically the same performance. So I'm not sure. If we look at the 1-year performance for this one, this is up 25.8% as of February 8th, 2019. If we look at the Roth 1 year, 21. Okay, so overall the Roth here is just slightly higher as far as the total return. That is because actually the S&P has actually broke out higher to higher highs here recently. So they've fully recovered their recent loss. I haven't fully recovered. I'm still right down here somewhere. I haven't rebroke to my new highs. So we'll kind of see how this kind of plays out. But overall, just buying an ETF versus investing in single stocks for dividends has been a higher rate of return. So you can see the equity in this account is at $607.18 with market gains of $109.31. And total over the course of the past 2 years, this has earned $10.47 in dividends. So much different investing style. This is mainly growth with a little bit of dividends kind of mixed in. You couldn't live off this type of portfolio, obviously. Even if you had more equity in this, the earned dividends would be 1/10 of your total capital gains or so. And then there we go, return there. Oh, I was on the wrong button there. Oops, sorry. Still the same thing there as far as earned dividends. I don't think we made anything in January as far as dividends paid out. Yeah, the last dividend that was paid out was back in December. So though is a 3, 6, 9, and 12th month paying company, so it only pays out every March, July, 3, 6, which is July, 9, which is September, I'm pretty sure. Okay, it's, the first. It generally pays out 3, 6, 9, and 12. There's some days there where it kind of fluctuates into the secondary month. So this was on the October 1st. Interesting. But anyways, jumping over into the spreadsheet. Here is the month of January. Our total base investment, which is just how much we've actually added into our Roth IRA, was sitting at $17,576.90. Our total account value was at $20,127.11. That was an invested difference with the market gains and dividends that have been reinvested of $2,465.30. Now, the total dividends that have been paid out since inception of January 2018 is roughly $790.68. So by the end of 2020, or probably mid 2020, I will have broken that 1,000 mark of just total paid dividends within the M1 Finance account. So it took about 2.5 years, to get this portfolio generating $1,000 in dividends. So imagine in 4 years, it's going to compound. It's going to go even faster now. So it took you 2 years. It took me 2.5 years to get $1,000 of dividends. But now it's going to be compounding because I'm still going to be able to add my $6,000 plus it's going to generate an additional $1,000 of equity that I am able to buy back more shares, buy back more dividend companies, and get paid out more dividends. So it's going to begin to compound at a faster rate moving forward. So yes, it took me 2.5 years to generate $1,000 of dividends paid, but now it's going to take me a much shorter time. So instead of 2.5 years, I'll be breaking 2,000 dividends paid by roughly 2 years. And then maybe a year and a half, I'll have 3,000, etc. So I don't know. We'll see how this kind of plays out. But the total return for the month of January. So at the very end of December, I was sitting with $20,031.15. The difference between the current value of the portfolio here at the very end of January and where it was at is roughly an increase of 0.48%. So I wasn't exactly negative. I wasn't exactly up for the month. I was basically flat there at 0.48%. The dividends that were paid out total within the portfolio was $52.96, which we had covered earlier. And the new equity that I had added into the market in January was $576.90. So at the very end of 2019, I had added $11,000 for 2017 and 2018 in January 2018. And then 2019, I added $6,000. So I had a total base at the very end of December 2019 of $17,000. And then by the end of January 2020, I had that extra $576.90 working for me. So that is shown there. Now, as we scroll down here, you'll see that my original cost for all the shares that I own is $18,452.49. There's a difference here of almost $1,000. Those are the dividends working for me that have been paid out in the account. So there's a difference there. If we bring our calculator here and we capture this difference for 52.49 minus 17,576.90, there's a difference of $875.59. This is a mixture of dividends that have been paid out into the account that have been reinvested, and it's also a difference of those shares that those dividends purchased having paid out dividends into the account. So there's a nice, this is what I'm talking about where it's just compounding. I'm having an additional $875 of equity working for me versus my base investment per year of $6,000. So I'm just continuously getting a higher and higher of equity that's available to just buy back more shares inside of this account. And then as we move down here slightly, we'll go down into this is the taxable account. I've only have a base investment of $100. There's a difference there of, I'm not sure why. Okay, maybe this is captured incorrectly. But my original base with all the equity that had been purchased is $489.52, where it's currently valued at $585.02 at the very end of January. This portfolio doesn't generate me very many dividends. It's $11 annually that this portfolio, the taxable, produces, whereas the Roth IRA produces currently roughly $754.67 from right now going forward. But as we move forward, month after month, these dividends are going to be buying back more shares. I'm also going to be adding money on a week by week basis and just continuously adding and growing the income. So eventually we should be breaking $1,000 of annual income and $1,000 of total dividends paid out into this account here shortly. And my total buys, we've already sort of covered, what stocks I purchased here. You can kind of see where those positions are at. Many of the positions that I bought in January, I'm not sure if that's, I don't know if this is actually correct. Yeah, these are, because I put those dates down. So I wonder if this is earlier in January. I think this may be the 3rd, but all those positions that I bought in January outside of Clorox and McDonald's are down currently from where I bought them. Even the Vanguard, did I? Oh, this is, okay. Yeah, this was a buy in January. So from where I bought it, it's still down slightly. Kind of interesting how that kind of plays out. I'm not sure. Oh, this is locked in place. These don't fluctuate. The live data, yeah, I don't think those fluctuate. Do they fluctuate? Let's look at the price. Current price. Okay, yeah, none of this stuff is fluctuating, so I'm not sure what the current price is right now. It's all locked in. So where I was at the very end of January, these are all locked in numbers. So none of that data changes. Whereas down here on this spreadsheet, this is all live data. So anything that I bought here recently, on the these days are off a little bit. My spreadsheets, it's kind of weird here. I recently bought activity, Roth IRA, 3 February, 90. Okay, so this is 3 Feb 20. My dates there. If I don't put them in correctly, the shares here that I recently bought for Walgreens and Chevrox, those are positive. The other ones, these were captured at the very end of January, so that would have been on the 31st of January. That's how much they were down since buying into them. I'm not sure where they're at currently, just because I don't keep that data. I just locked it in and set it and forget it. So that is basically all I wanted to cover. We did kind of see where we were at as far as total equity between both portfolios with the combination of the Roth IRA and the taxable count. We had a total of $20,714.60. The difference from December of 2019, the difference there is very small at 0.58% month over month. So that's the only difference there. This little thing here being locked, that's kind of messing with me. You can see the difference here on this spreadsheet where everything kind of moves all together, and I've locked it in so that these ones kind of remain in place, but I'll probably remove that in the future, just depending on the type of video that I'm doing. If I'm focusing more on the Roth IRA, I'll kind of lock it in, because then it allows you to kind of see all these numbers here. Otherwise, I will just probably not lock it. But that is going to be it for today's video. I just kind of wanted to cover some of the dividends. So again, we were positive in the month of January. We received $52.96 in dividends. All those were reinvested into. Overall, the portfolio is doing really well. It's doing exactly as it is designed to do, which is just produce dividend income. Now, a lot of these companies are considered dividend aristocrats, having paid out dividends for the past 25 years or longer. So I'm really trying to build up this long-term portfolio of holdings, and we'll kind of see how it plays out here in 2020. So that is it for today's video. If you guys did enjoy this video, again, hit the subscribe button below to subscribe to the channel. I do cover the stock market, dividends, and real estate. This is my first video doing a 1 month recap in quite a while, so I'm really rusty as far as what content I wanted to hit, what I wanted to show. If there's anything that I missed, let me know in the comment section below. What would you like to see in these monthly recaps? What information would you like to see covered, or what would you like to see different? Let me know, and we'll try and improve here in February. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.